Hey, everybody, welcome back to the Journey podcast. I'm here with one of my friends, Joe Tillman. He's the vice president at Raine. Raine is an incredible fund firm. They are advisors to really awesome companies who are looking to either raise or sell. He was previously an attorney, so we're going to talk a little bit about his journey into private equity. And he received a BA in finance from California State University, San Bernardino, and a JD from NYU School of Law. Joe, welcome to the podcast.
Thank you. Thank you for having me.
Hey everyone, I'm Morgan DeBaun, a passionate entrepreneur and life advisor. With the Journey podcast, you'll discover that success isn't about the destination, it's about the journey. I'm sharing stories of amazing people who've taken control of their lives. Join me on my own journey to discover the secret sauce behind reaching success with permission from no one else. I met Joe randomly because I was looking for Black folks in private equity, and I DM'd him on LinkedIn and was like, hey, we don't know each other. I've worked with Raine before, but I've never met you. And can we just have a call? And he responded to my random DM a couple years ago.
Yeah, it was a couple years ago now.
Yeah.
Yeah.
And so I called Joe whenever I'm thinking about buying a business. When I was considering building out our festival business and was considering buying R&B House Party, Joe was one of the people that I called because I wanted to understand what are the metrics that I need to be thinking about? How does the market evaluate live event businesses? Raine, of course, does an incredible, wide range of types of assets, but he was just really helpful at helping me think about the criteria that I should be looking for so that I could properly price the business. And so today's episode, we're going to talk about what is private equity and just the basics of a different type of capital and a different type of entity that you could partner with in your journey as an entrepreneur. It's one of those things that isn't discussed a lot in our community. You're not growing up and being like, oh yeah, my uncle's like a private equity guy. That's not something that we are all exposed to because it is a very niche but highly impactful class of capital that I'm excited to share with everybody today. So Joe, maybe if you could just start a little bit with your journey, how you transitioned from law over to private equity, that would be great.
Yeah. Happy to do it. So my background is interesting. So not too dissimilar to a lot of the folks who it sounds like are your audience, in that I did not grow up in finance. I did not grow up with family or friends who were well versed in these spaces. I studied finance in undergrad. So as you noted, I went to Cal State San Bernardino. I played D2 basketball there, and fortunately, I ended up having a professor who really took an interest in me and decided to invest in me during my junior and senior year. I graduated college during the global financial crisis. So I graduated in 2008 with a degree in finance. And so, as you know, not many jobs in finance to be had at that time in the world. And so I had to rethink what the next leg of my journey was going to be. So went to law school after college, really thinking that I wanted to de-risk myself, thinking, hey, in the future, if the world blows up again, someone's always going to need a lawyer. There's always opportunities for lawyers to be involved in various financial transactions. And so went to law school with that in mind. Had never spent meaningful time outside of Southern California. Went to NYU really just to get a different feel of things. Thought that I was going to go out for school for 3 years, come back and practice in LA. And here we are over a decade later. I'm now a suburban New Jersey dad with a burgeoning golf addiction. And so went to NYU Law. In law school, though, I actually maintained an academic interest in finance and private equity. I was on a journal called the Law Review at NYU. I wrote my law review note on Dodd-Frank and private equity, really exploring how the U.S. was responding to the global financial crisis with a particular focus on the alternative investment space. And that interest then transferred into my work as a junior lawyer. So I started my career at a firm called Gibson Dunn. Fortunately, at Gibson Dunn, they allow junior transactional lawyers to really develop a broad, sort of degree of exposure across various corporate financial disciplines. And so I got to do M&A, I got to do finance, I got to do fund formation, all for private equity and VC clients. And so did that for about 4 years. And then after 4 years as a transactional lawyer at Gibson Dunn, I think like most mid-level attorneys, I kind of started to think about, hey, what else is out there? What do I
Right.
really want out of my career, etc. I was contacted by a headhunter who told me about a job actually as associate general counsel at Raine. I had never heard of Raine in my life, but I looked on the website and said, hey, these guys do pretty cool things, and started down the process of interviewing at Raine as a lawyer. The
Wow.
more that I learned about Raine, the more I became interested. And so I joined Raine in November 2016 as associate general counsel. By January of 2017, so months after joining as associate GC, I was already like, okay, like, is this it, right?
Yeah.
So as a lawyer, you go in house. It's meant to be a much more dynamic environment. You get much
Right.
more exposure to the business side, and it was all interesting. I love the people I was working with. I was working on very interesting deals. I got to really widen the aperture of my exposure as well. But at base, the core of my function was still,
Right.
reading, writing, reviewing, negotiating, 80 to 100-page legal agreements. And it was intellectually interesting work. I was loving what I was doing in that respect, but there was no relationship building.
Yeah.
Part of who I am is connecting with people. It really makes me tick. And there was no real room for me to flex in that role. And so I did it for about a year. And, in my nights and weekends, I was kind of exploring other stuff to do. Do I want to get involved in politics? Do I want to get involved in tech? I actually, thought about doing something entrepreneurial. And so I explored a number of things over the course of a year. And then January 2018 hit. At the beginning of every year, I do a fast. I spend a lot of time praying and being thoughtful about, what I want out of the year ahead. And I do a lot of journaling. And I was journaling in January 2018, and I decided to look back at my journal of January 2017 and say, hey, what was I journaling about a year ago? And realize it hit me like a ton of bricks that a year had passed. And I was journaling back then, hey, God, I'm in this role. It doesn't feel like it's a fit for who I am and what I want to be. Help me figure out what's next. And a year of my life had passed. I'd figured out a bunch of other stuff that I didn't want to do, but I
Right.
still didn't know what I did want to do. And
Yeah.
so it really just struck me I had to make a change. And so fortunately for me, 3 of the 5 co-founding partners of Raine are all former lawyers. And so when I went into the senior leadership office at Raine and said, hey guys, like, I'm not going to be the one interviewing behind your back. I'm not going to
Yeah.
be trying to take a job somewhere else. This is what I'm going through. And even if I have to go sit on my couch for 6 months and figure something else out, I've got to do something else. And fortunately for me, they were very much simpatico with that idea, and that started a series of conversations that led to me transitioning over to the business side at Raine. And so I made the transition in 2018, and it literally was the best thing I ever could have done for my life. I love what I do. I love getting able to advise, some of the most sophisticated founders and management teams throughout the TMT space. I love getting to interface with so many different investors across the entire buy-side landscape and really understand what types of deals are actually getting done in the private markets, and then leveraging that expertise, for the benefits of my clients. It's an incredibly fun and dynamic space to be in. We're in the high growth sectors of TMT. So I just consider myself incredibly fortunate, and I love, getting out of bed every morning and, figuring out how to add value.
That's awesome. So many things in your journey, I think, resonate with me in terms of your ability to say, okay, my passion, my purpose, and also let me project myself into the future and say, am I going to be satisfied with this trajectory that I'm on? I'm grateful for the skills. I'm grateful for the background. I'm grateful for the opportunity. And yet, this is not enough, right? Like, I think a lot
Correct.
of times people, when things are good, it's hard to say, yeah, but it's still not enough.
That's right.
It's like you had a great job at a great firm, it's very stable.
Where I came from too, it was like, hey, look, like, you're making money, like, you
Yeah,
are by all accounts very successful.
right.
What is wrong with this? Yeah, absolutely. So no, you get it.
So yeah, I think that's important because this is what this podcast is about. Like we're just encouraging people to it's okay to be unsettled, even in a good
That's right.
situation.
That's right.
As an
That's right.
ambitious person, as a high achieving person, it is okay to say, I like it, this is fine, nothing is wrong. I want more or I want different. for myself in the future.
That's right. That's
And
right.
it might
I
take
I
time,
love it.
you know, like it took you
Correct. Correct.
over a year. It took you 2+ years to figure out how to maneuver. And I also imagine in those 2 years, you weren't like just kicking it. You were continuing to provide high impact.
Yeah. Yo, absolutely. I mean, so when I mentioned I was exploring things on my nights and weekends, yeah, but during the day, I had a real job. Yeah, I
Yep.
had a real job, working very, very hard. And so had to do everything on my own time. But ultimately, when you are driven to find what it is that your purpose is, you find a way to make those things
100%.
happen.
So talk to me about what is private equity, Joe? Like when you say private equity, when I say private equity, what are we talking about here?
Yeah. So I say at base, what we are talking about when we use the moniker private equity, like we are effectively talking about the landscape of institutional capital that is out there with the purpose of going out and buying or capitalizing businesses, adding some sort of value add, whether it's operational expertise, whether it's strategic advice, et cetera, in order to help those businesses grow and achieve more than they otherwise would without that capital and that expertise. And then ultimately selling that position or otherwise recapitalizing those businesses in a way that allows those institutional investors to get that capital back, return it to their own limited partners, to their own LPs, and thus first, sort of take those returns, but then also go out and look for more businesses, to invest in. It is an entire swath of the sort of capital markets landscape that is solely looking at opportunities for private businesses to go out and generate returns on behalf of their LPs.
Right. So we have public markets, which are the stock exchange, et cetera, right? All
That's
of
right.
us can go on Fidelity and buy a share of Apple. It's a publicly traded company, but there's actually
Correct.
way more companies that are in private companies. And it's not that
Correct.
those companies aren't being bought and sold. It's just that they're sold in a private marketplace. And I think
That's right.
that's important for people to understand because as we're talking about opportunities for entrepreneurs who eventually want to exit their business, sometimes the only narrative that they might be exposed to is like, I have to IPO,
That's right. That's
and
right.
I don't think
That's
people
right.
talk enough about the fact that no, there isn't and huge industries that are built on top of buying profitable businesses and
Correct.
are buying full or minority stakes in those businesses.
That's right. Yeah, that's a great point. I think the venture capital industry has done a really great job of marketing itself to early stage entrepreneurs, to would be entrepreneurs, to just companies that are just starting out writ large as a potential funding source. In general, venture capital firms are playing for that ultimate home run exit. That tends to look like an IPO or other public markets. Sometimes it looks like a sale to a broader strategic investor who is operating in a similar space. But you are right, not enough light is shined on the private equity industry, both as a potential sort of exit valve
Mm-hmm.
for founders and management teams, but also as a potential funding source. There are many private equity investors who take significant minority stakes in businesses and still be
Right.
involved and help those businesses grow throughout the next leg of that journey. And ultimately, I think it is incumbent upon us as folks who know about that space, to really do what we can to help educate founders and management teams around what that landscape
Exactly.
does look like.
Okay, so actually, I should ask this question because I know the answer, but the people don't know the answer. How much money does Raine have?
That's a great question. So, Ray, how much bread do you have?
Now,
Yeah.
let me just level set with you. Like, I just want to make sure people know what kind of money we're talking about here.
Yeah. It's a good question. So Rain has over $3 billion in AUM, and that's housed under three platforms. So Rain has our flagship growth equity platform, where we are writing, call it 50 to 100+ million-dollar checks in growth stage TMT businesses. We're not control investors. We tend to take significant minority stakes, but we like to be value added in how we think about our investment mandate. We want to join the board. We want to be able to unlock value for the teams in terms of introductions or other strategic advice. We have a venture capital platform. So we're writing call it $5 million checks, and mostly Series A businesses, but that will go as early as seed and as late as Series B or C in certain instances. And then we also have a dedicated gaming fund that is investing mostly at the Series B stage in
Mhm.
video game companies, traditional video games, as well as some real money gaming, blockchain based gaming, really anything in and around the video gaming ecosystem.
Okay, so 3 billion. Just want to say it again because I just want to make sure people understand as we're talking about
Over 3 billion.
yes, sorry, my bad. Over 3 billion. And the reason why that's important is because we're not talking about, early stage capital. We're not talking about early stage if you're just getting started, like you're not talking to a private equity fund, right? At what point do people need to be thinking about building relationships with private equity investors or funds? Because what happens, to your point on VCs and marketing, the narrative is I need to network with all these VCs, right? So you network your butt off, you go to South by Southwest, you go to Afrotech, you go to your local meetups, you meet your regional, family offices. You do a lot of work to get to know these investors and for them to like you and all of the things so that when you ask them for money, they're like, oh yeah, I know Morgan. Yeah,
That's
I've
right.
been watching Morgan grow. I've been seeing her traction. She's been really consistent. Yes, I will put $1 million into Morgan's business, right?
Mm-hmm.
And then 5 to 7 years goes by and that business still exists. And then people start, this is what happens to me. Investors start saying, what are your plans? I'm saying, what are you talking about? What plans? My plan is to keep making money, honey. What are you talking about?
That's right.
What's the future? They start asking, they're really nice about it. So what is the future? What does the future look like for Blavity? What are the plans? What
Yeah.
are the future? And what they're really asking me is, girl, when are you going to sell this thing so we can get our money back?
That's right. That's right. That's right.
And,
That's right.
and,
That's
and
right.
I'm saying, look, I'm living a good life. I'm living a good life. I got good employees. I've got good products. Everybody's paid. Like I work
That's
so
right.
hard to be this stable. I'm not doing
That's,
anything to mess
that's
this
right.
up. So my question to you is at what point should an entrepreneur start to engage or build relationships with private equity investors?
Yeah. Yeah. So I want to touch on one of the things that you mentioned. I think it's very important for people to understand is private equity investors are still investors in the same way that venture capital investors are investors, in the same way that friends and family investors are investors, which is to say, investors are investing with the purpose of getting a return. So
That's right.
those questions are going to always be a part of the game, despite who you are taking capital from. And so I think that's just a fundamental notion entrepreneurs need to understand. Now, the question around private equity versus venture capital is an important one because I don't think that enough people appreciate how valuable it can be to start networking with private equity earlier. When you think about what does middle market private equity look like, middle market private equity spans from companies that are from $10 million in enterprise value all the way through $500 million plus of enterprise value, right? So the difference between the lower middle market and the upper middle market is pretty broad, right? It's pretty broad. And so I think it does behoove founders and management teams to at least start to understand what that landscape looks like at the earlier stages, because you never know when it might be helpful for you to have those types of relationships, either because for whatever reason, it's time for you to start to think about an exit, or you think about capitalizing your business from that audience, or hey, by the way, maybe you just want to pick the brains of those folks and try to understand, hey, what does the market look like from your perspective?
Yes.
What's resonating with you with respect to the companies that you are looking at and investing in, just so I can know these things in the back of my mind as I'm having conversations with other entrepreneurs throughout my ecosystem. So I do think it is worth people's while to start to have those relationships. And the good news is there are a ton of private equity firms in the middle market that are active and available and looking to meet with interesting companies and entrepreneurs.
Absolutely. One of the things that starts to happen, and to me, this was the signal, is when you start getting emails from random people, like you start getting emails from their search funds And these are funds that, this is my definition of it. I'm sure there's a better definition,
Yep.
but my definition is they hire former MBAs to like source the internet, source Crunchbase, which is a database of information about startups. They source LinkedIn, where they're looking to see how fast your company is growing. And they source all different types of databases to say which companies are doing interesting things and growing. Then they start to send you emails and they're just like, hi, I run a firm and I can invest this amount of money. Have you ever thought about selling your business? And I'm like,
That's
not to
right.
you, sir. And I like never responded. But when those started to pick up, I was like, okay,
Oh no.
what's going on?
Yeah. Well, search firms do get a bad rap sometimes because, to your point, it is often an MBA, like some post MBA student really trying to make a start into private equity and looking for a deal on behalf of some well capitalized family office or high net worth individual. But oftentimes these folks are hungry, they're connected. They're willing to roll up their sleeves. And so, yes, that is a segment of the private equity ecosystem that exists. It does tend to be a lot of folks' first entree into the space. Not surprising to hear that you get those calls, but those cats are hungry. They're out there trying to hustle.
So I was like, let me just take a call. Like, let me just find out, because it was new to me. I was like, well, I don't understand.
Yeah.
So I took the call, and then they just grill you with a lot of like, I'm like, this is personal information. Okay. This is like, you're asking me like, what's your revenue? What's your profitability? What's your contribution margin in the business? I'm like, whoa, sir. We're not even under NDA.
Yeah, that's right. Well, okay. So I felt you are bringing up a good point to highlight about private equity relative to venture capital, which is to say, private equity investors tend to be much more focused on the financial metrics of the business relative to early stage venture capitalists, right? Early stage venture capitalists, again, I'm making some broad generalizations here, but can index more on the team, your background, what have you done before? And what they are really trying to underwrite is how strong are you as an entrepreneur?
Yeah.
And what is your ability to navigate all the various twists and turns that are going to face your business? Because, by the way, you are going to face twists and turns, right? On the other hand, private equity investors tend to be much more focused on financial metrics because oftentimes they can use sort of leverage and other sort of levers of financial engineering in order to drive returns. And so for them, it is important to understand much more clearly what your financial profile looks like so that they can understand, hey, what are the true levers of value creation that I can actually flex here before I make the investment.
Yeah. In other words, they have access to a huge balance sheet, so they can do things like take loans and take debt or make different decisions within their risk profile to say, okay, your business has cash flow. This has been consistent. Your business is profitable. These things are consistent. I know this about the market. I know this about the growth projections for this market because I have all this data. I think private equity people are like the best data analysts because
correct.
The data that you guys have, I'm like, what database does Joe have?
That's
what I'm saying? Like that I can access to.
Yeah, it is incredible the amount of data that is available to folks that exist throughout the private equity ecosystem. You're exactly right. It is a much more data-driven exercise in their underwriting. But also, there's a lot of benefits that private equity investors can bring to the table, in large part due to all that access, to data and various sort of operational databases. And so, it ends up being a pretty interesting part of the ecosystem for sure.
Yeah. So let's talk about for advisors. So there's another category of work where you're advising companies who are selling, right? Or buying, could be either category. What is the role of an advisor in that type of a relationship?
Yeah, sure. So I think a role of an advisor is really multifaceted. I think in some segments of the market, the advisor role, can be viewed as a little bit of a negative at times in that, like, hey, if you have an advisor, is there something wrong with your business, right? Like, don't you have term sheets? Just falling in your lap. Like, why do you need someone to help you think through this? And I think it's a really big misnomer, especially this day and age when the global capital markets landscape has just gotten so much more sophisticated and complex.
Yeah.
The role of an advisor is multifaceted. One, an advisor really can help you understand how your business is going to be viewed by various investors across the private and public markets landscape, right? Advisors traffic in private information, they have relationships with various companies, and so they know, hey, how does your company and your metrics stack up against your peers, both at the stage that you are in, as well as sort of companies that are at further stages in their life cycles. That's number one. Number two, when it comes time to going out and executing on a strategic transaction, whether it's capital raising, whether that's a sale, an advisor really should sit alongside you and actually give you the puts and takes around what those processes or avenues are actually going to look like for you, right? What is the likely outcome if you look to go out and raise X amount of capital from the markets today? What does that look like in terms of the interested partners that you're going to encounter? What does that look like in terms of the types of deal structures that you should expect to see? What does that look like for the types of governance that people might expect from you? And by the way, what does that look like in terms of what are the expectations that those three things are going to ultimately lead to in terms of how these new partners in your cap stack are going to expect the business to go, going forward. So they really should be, your partner in helping you sort of think through those things. And then in the event that you do decide to go out and execute either a capital raise or a sale, they are really, your right hand sort of like team to really make sure that you are positioning your business in the right way to make sure that it is going to be properly understood by the market. They're the ones who are going to actually help you interface with those right partners and make sure, hey, look, I know your competitor just raised X million dollars from this who's who of consumer internet or enterprise investor, but that may not be the right partner or firm for you for these reasons, right? Really helping to educate you on those aspects of your transaction and then taking you out on the road, helping you think through, okay, hey, when these investors are asking for these categories of diligence, is that normal? Are they getting too much? What are they really getting at, et cetera? The advisor really is there to help translate for you what all of those questions look like, help facilitate a lot of that diligence, and really make sure that you are ultimately getting the best deal that exists in the market at that time. Now, one of the last points I think is pretty important. Like an advisor really can kind of be painkiller for an entrepreneur or management team because, as you know, fundraising is hard. Fundraising is hard. Selling a business is hard. And oftentimes you are doing this while still trying to run your business, while still trying to make sure that you continue to perform and hit those metrics that those folks are going to be asking you for. And so the advisor really can help lighten the load for an entrepreneur or for a management team to make sure that they are able to actually execute on that process while still successfully running their business so that everyone gets to a good outcome that they're happy with at the end of the day.
This is so important for everyone to understand because for me, when I was fundraising, especially as a woman and a person of color, I felt like I have to be the one in the room. I have to be the one that they're investing in. It has to be me because if it's a man, that they're going to default to the man and I'm the CEO and I'm the largest shareholder. And it took me a long time to actually realize, no, Morgan, you're thinking about this incorrectly. The bigger you get, the more people hire people better than themselves to do the thing that they do all the time. I'm going to say it again. The more successful you become, the more you hire advisors.
Talk about it.
Do what they do all day, every day.
Talk about it.
And shifting my mindset to that has completely changed my stress level. It's completely changed my anxiety and my relationship with wanting to grow and having the fear. I used to have this fear of, well, at every level, like I can't sustain. I can't be who I am at this next level if I've got to do all these things. And so I would I would throttle myself. There was a time when I would throttle my
Yeah.
own growth and
Yeah.
sabotage, not literally sabotage, but like just be like, no, we're good because
Yeah.
I don't have time to go and learn a whole new industry of fundraising. I don't have
That's
time
right.
to raise a Series B or a Series C and be buddy buddy with Goldman Sachs and be buddy buddy with Morgan Stanley and be buddy buddy with all these private equity firms I've never heard of. I don't have time. Okay.
That's right.
And so I actually had to do a lot of work with myself and with other mental advisors to let go of those limitations in my executive coach to say, you can engage in a process and not be the person doing all of the work.
That's right. That's right. That's
And
right.
that's just really, it was really foreign for me. But that is what these white boys are doing out here. And that is what, like, that is literally one of the things that I think prevents our audience and entrepreneurs sometimes from getting to the next stage because we're just so conditioned to think we need to do everything that we don't, you know?
Can we talk about us? And if we're talking about our audience, like our people, for like we come into these
And women.
spaces with these and women, we come to these spaces with these chips on our shoulders. Like I have to be the one doing, I have to be the one. And we need to be comfortable raising our hands and saying, hey, look, let me get other people around the table who can help be thought partners in all of these facets. So thank you for putting it that way, because I think it's critically important in a way that not enough of us are actually thinking about. Candidly.
It's a game changer. It's a completely game changer. You're able to multiply your reach, your impact when you have strategic advisors around you that are financially and legally responsible for doing the right thing when you're in a contract with them.
Correct.
Right?
Correct.
And like having that fiduciary responsibility is actually incredibly important. And I think that's something that as people are evaluating advisors, because people are going to pitch people all the time. Oh, I'll be your advisor.
Yes.
I'll do this. But do they have a legal and financial responsibility to act in your best interest at all times? And so that's something that I really help when people ask me. I'm like, yeah, be careful. Make sure you're organizing with somebody who's a part of an institution because there's actually rules that you all operate within. Could you actually share a little bit what that means in your world? What are the types of like guardrails or rules that are within your fund and as a part of your industry that maybe people might not know about?
Yeah, it's a good question. So I'll answer that in two different ways. So one, as investors, so again, Raine has our own principal investing business. We have capital. So we are acting as fiduciaries, but also our fiduciary duty extends to our limited partners for whom like we have their capital and we are investing on their behalf. And so it is incumbent upon us to do what's in the best interest of our investors. And that includes making sure that we are proper stewards of their capital. We are investing in companies that we are excited about. We are actively managing those investments for the benefits of our limited partners and doing everything in an above board way, which ultimately ends up with the goal of making win-win-win for everyone involved. As advisors, if we are advising founders and management teams, we have a duty to make sure that one, like we are operating with like to the utmost degrees of integrity and responsibility in terms of how we are representing them out in the marketplace. As an advisor, like we are agent, like we are your agent out in the marketplace. And so we have a responsibility to make sure that we are not misrepresenting any information out in the market that you provided on our behalf. We have an obligation to make sure that we are providing you with advice that we believe based on our expertise is in the best interest of you and your stakeholders, given the transaction that you hired us on. One of the things I want to touch on, I think is important for the audience to understand in terms of choosing an advisor. Yes, it is important to make sure that there are these institutional guardrails in place, that people are acting as proper fiduciaries and agents for sure. But also, when you're hiring an advisor, you need to make sure that you know who you are hiring. Who is that person that you are working on? This is a people business. These are people businesses, Morgan.
Yes.
And so when you are getting pitched by an advisor, it's like, okay, advisor, that's great. Who am I getting? Who is going to be on my team working with me? Who are they in terms of their subject matter expertise? So what is your institution's subject matter expertise? Sure. But what is your subject matter expertise? if there is a disconnect between your subject matter expertise and the institution's expertise, how are we leveraging the full benefits of the institution's expertise for my benefit? What is your and your team's knowledge of the universe of strategic buyers, the universe of financial buyers, both in terms of the most natural buyers as well as creative, more off the run buyers? Because as you know, because the markets are changing so rapidly, companies large and small are thinking about various ways to different verticals expanding and growing. Hey, okay, that's okay if I'm a consumer company. It's all great that you know all the regular way consumer buyers, but hey, are there interesting off the run buyers that might be relevant for us to talk to that you know? Who do those folks look like? And also, like, who are you? Like, if things start to go left, because look, these processes can be hard. We always want, like, we all at the outset, we are going to run through walls to make sure that our founders and management teams get a good outcome. But what does that really mean? Are you available? Me, Morgan, as the CEO, when I'm up at night thinking about, are these term sheets coming in?
Yeah.
And if I pick up the phone, Joe, are you going to be on the end of that phone? Like,
right. Are you going to be in the south of France on a yacht? Like, what are we doing?
Correct.
Yes.
Correct. And what are we like? What are we doing? And look, we all run businesses. We all have organizations. We understand that we operate within teams, and no one person is an army. Like, for sure. But it's important for your audience to know when they are hiring an advisor, who am I getting? Who is the team? What are going to be the roles and responsibilities of the team? And who is really going to be in the foxhole with me? Because that is going to be important on, I say this a lot, the Tuesday afternoon of it all. You know, hey, we're on this process. We did the pitch. We're out on the road. But hey, we're now on week 7.
What's happening?
It's Tuesday. What's happened? It's Tuesday night. Who can I call and find out, hey, what's going on? And so those
I
things,
think what Joe's really trying to share. So I've been through this process, right? I've had a strategic advisor. People have tried to buy Blavity. I've entertained them trying to buy us. And it's a really hard process. And your advisor is someone that you talk to a lot and someone that you have to get really vulnerable with, because when you're potentially selling your company, you know, buying a company is a different thing, but when you're selling a company, especially as a founder, it's a really emotional experience. And so you need someone who understands, hey, I understand that I want this term, and this term that I want doesn't feel significant to you, but it's really significant to me. So like, I had a term with one of the people that I was negotiating with where I was like, if within 3 years you decide you want to sunset one of our brands, you're going to give me the option to buy it back at the fair market value. And my advisor was like, Morgan. And I was like, what? This is what I want. This is what I want. Me. If they don't want it in 2 to 3 years, give it back. I'll sit on it. I don't have to compete. Like, I will sit on the asset for 5 years. You tell me how long you want me to sit on the asset. But like, that's right. Don't just throw it away because it carries value to the people that I care about, even if it doesn't fit within your larger business plan. You know,
I love that, Morgan. Can I say one thing? Because remember, if you look at the arc of my career, so I've spent the last 11, almost 12 years in the alternative investment space. First as a lawyer, now on the advisory side, and there's always this concept of market. Like, what is market? What is market? People always want to operate within market. Sure, it is important to understand how terms tend to get done, but no two deals are the same. No two deals are the same. No two companies are exactly the same. No two founders are exactly the same. And so it is important for your advisor to know that, certainly to know what's within market, so that I can tell you, yeah, Morgan, what you're asking for is wild.
Yeah.
I'm telling you it's wild. But by the way, it's your business. It's my job to help you get the best deal out there. I'm going to tell you it's wild, but if that's what you want to do, it's my job to make sure that we are thoughtful and strategic about how do we actually get that done for you, because you are going to be the one that has to live with this post transaction.
Yeah. And I think it's important for people to understand you can ask, you know, if you don't ask for the things that you want when you're in these processes, then you're never going to get it. I mean,
That's right.
you're trading different types of things. And so sometimes they want things you don't care about, right? But you don't want,
Hmm.
hold that close to your heart. You don't want them to know that you don't care. Okay. So don't just give it away. I'm going to do a whole episode on negotiation tactics another day because
And I'm gonna tune in. I'm gonna
you
tune in.
know, it's a whole
Yeah,
thing. And to me, strategic advisors are excellent at negotiation as well. And it's
that's
important
correct.
to have a
That's
third
correct.
party helping you because negotiating a deal for yourself, particularly if you're going to have a relationship with the person that you're buying or selling to after the deal, you need an intermediary third party that can be the bad guy. So I used to call my strategic advisor and be like, I don't like it, but I'm going to act like I like it. I need you to rip it apart.
That's
Okay.
right. Yeah, look, that's the painkiller point I was telling you about, the role that an advisor can play. Look, ultimately, you and the buyer or the investor, it is a marriage. Like you all are going to have to like form this relationship and move on, and sort of endure that endures beyond the transaction. But it is my job, our job as advisors to help bring that together, and that could look like a whole host of things, throughout the process for sure.
Absolutely. So, Joe, let's talk about the market today. Are we in a buyer's market or a seller's market? Tell me a little bit about what you're seeing and how you're thinking about today's market.
Yeah. So we're at a very interesting point in the market today, in that the last couple of years have been very challenging from a macroeconomic standpoint, from a global financial market standpoint, in that once the Fed started on its rate hiking cycle in the spring of 22, I think a lot of buyers and sellers have had to really sit on the sidelines and think about what does it mean to transact in a very different market environment relative to times past.
Mm.
That means a whole host of things. For investors, many of whom actually grew up in a low to no interest rate environment, right? Many people who are in investing seats at a lot of these venture capital firms and private equity firms just have not known what it's like to have to transact in a high interest rate environment. And so when they're thinking about underwriting businesses, they're just having to confront new norms and new math around what value creation looks like going forward. I think for entrepreneurs who started businesses either before the pandemic or during the pandemic, they're now having to come to grips with what it's looking like when there isn't as much capital out there readily available to give them,
Yeah.
to invest behind their dreams and their aspirations. And so the last couple of years have really been spent with a lot of folks kind of taking a step back and just trying to figure out, hey, what does this new normal mean? In the meantime, a whole host of new entrants in the financial markets have started to step in the shoes of other investors that have taken a step back. And that mostly looks like private credit investors, structured equity investors, investors whom have many more tools in the toolkit that allow them to bridge valuation gaps, to bridge sort of structural disconnects between sort of the founders and entrepreneurs looking for capital and those investors
Private
ultimately
equity
looking.
people, like when you see people do those deals, is that like oh, you ran out of money, you're not a good operator? Or like, does it carry any sort of sentiment when people do like revenue based financing or anything?
Yeah. It's a great question. So I'd say during 2022 and early 2023, I think a lot of founders and management teams were wary of that type of capital because they were concerned around, hey, what does this look like in terms of the signaling, to the market, right? Yes, is it better for you to raise a clean deal with no structure and no terms? Sure, in certain contexts, but like, is you not raising money and going out of business better than like getting capital that at least is going to allow you, to continue to operate your business and try to find your way out of this new normal? Those are the types of questions that people were grappling with. I'd say now you've got private equity investors who found many more ways to partner with creative financing capital. You found many entrepreneurs who are able to take structured capital in ways that allow them to make their way to the other side and navigate their businesses out of the initial shock of the high interest rate environment. And so I actually think there's a lot of success stories in the marketplace today for founders and entrepreneurs that sort of took on structured capital. I'd say when you think about your audience, like the middle market, like small to medium businesses, these are businesses that got hit harder relative to other businesses in terms of what this higher interest rate environment did to the price of inputs for their businesses, the ability for them to go out and tap long-term liquidity when they were going through these challenges. And so I would imagine your audience were a lot more sensitive to these global financial shocks. I'd say the good news for this audience is that the middle market has actually picked up pretty meaningfully in Q1 of 24. And that's largely been a function of two main things. One, the gap between buyer and seller expectations has started to close. I think management teams and entrepreneurs have started to realize that, okay, the valuation environment is just different. It's not like it was a couple of years ago, right? And that it just is what it's going to be. And so they're much more open to taking deals that are more reflective of the current market. And then likewise, on the investor side, you've now have these investors who've had a couple years of figuring out, okay, what does the math look like now of putting a deal out there today? And so I think those two things have led to a lot more deals being able to get done in the middle market. This also means there's been an uptick in different types of structures used to get those deals done. So from an M&A perspective, you're seeing many more earnouts being used on M&A deals relative to times past. You're seeing more seller financing being used on deals relative to times past. And you're seeing a lot more equity rollover, being used now than in times past. But I think the combination of all those things has led to an uptick in deal activity in the middle market, which I think bodes well for many founders and entrepreneurs, looking to explore strategic alternatives, both in the back half of this year and into next year. Just knowing that there is more activity happening, I think is just ultimately a good thing.
Yeah. And I would say the same thing from like my perspective as a founder. I'm absolutely seeing people who are sitting on the sidelines, just like hoarding their money for the last couple of years, are basically coming back and saying, hey, I think they're getting pressure from their LPs or their boards, depending on who I'm talking to like use the money that they raised 5 to 6 years ago because their funds are expiring, or the board is getting itchy, saying we got all this money on the balance sheet. What are we doing with it? How are we growing? Because they're not growing organically anymore. So I'm seeing a lot more conversations like that. And at the same time, I'm seeing a lot of small business owners and founders who raised money, had great 2020s, great 2021s, challenging 2022s, or just okay 2022s, and terrible 2023s that are kind of like, well, what do I do with this thing? And I'm tired because now I've gone through 4 or 5 years. And heaven forbid, you're like me, you started in 2014. You're really tired. So there's a lot more, I think, entrepreneurs who are saying, I'm open to some sort of exit here. So I'm excited to see what happens this year. I think what I predict will happen is we'll have founders, a lot more exits. Now, the press release and the actual return on investment, word to the wise, don't always trust what you see in the headlines in terms of who's making money. Don't try to count somebody else's coins because you don't actually know, just like Joe was saying, how this deal is structured. Is it all equity at that valuation? Or is that founder subject to an earnout, which means they have to hit certain growth milestones over a few years, right? So you don't really know. Don't try to compare yourself to the headlines, please.
Correct.
It will end well for you and your mindset. So I'm excited to see what happens in the rest of this year. Joe, in closing, for someone who is looking to just get more information so that they can speak the language, they can feel more confident when they're going out to advisors to interview people, what are some basic places or books or things that people should be listening to or watching or reading that could help them get a little more exposure here?
Yeah. So one of the things that I always tell people, which is a little bit of a hot take, no, maybe not a hot take, but For Dummies books, like Private Equity for Dummy. I'm not.
Honestly,
honestly, so these books have a way of just dumbing down very sophisticated concepts that are prevalent throughout private market transaction in digestible ways for people to understand. So I usually throw that out there as a starting point for people.
Right.
I'd also say, and you've talked about this, I know you just had a conversation about this recently, ChatGPT has changed the game, Morgan, no one should ever have to be at a standing start on any topic ever. And so what I would say, I would encourage your audience, if you're not using ChatGPT or any of these other, LLM based, sort of search platforms, I would really encourage you to get up to speed on that technology. I think it has completely changed the game in terms of people's ability to just like ideate and do high level landscaping work on any topic under the sun. And so that's usually what I would advise, starting people on. And then in terms of, podcasts, I would encourage them to listen to podcasts like yours, people who are having very transparent conversations around what they're seeing in the ecosystem. On the VC, I really like 20VC. I like Harry Stebbings' venture capital platform. He talks a lot about what founders and entrepreneurs are doing. I like Invest Like the Best. Patrick O'Shaughnessy, I believe is his name. I like that one. And really just continue to be a voracious consumer of knowledge. Like there's so many avenues for people to start to get up to speed on these topics. I would just encourage people to just continue to be intellectually curious, starting with some of those initial sources that I mentioned. But if you listen to nothing from me, ChatGPT, I'm just all about it.
100%
All
agree.
about it.
100% agree. If you guys need inspiration, you can listen to my episode with Jeff, my co-founder, on all things AI. And I would also throw in there, like I said, you guys, I LinkedIn Joe. Like, I didn't know this man. Okay. So even me, successful, do the things, you don't know everybody. That's okay. You can send a bunch of LinkedIn messages. Maybe one of them will respond. So
that's right.
Don't be scared also to just talk to a human being as well and say, here's what it is. You might need to flex a little bit. You might be like, my revenue is this, and they need to know who you are, right? But
that's right.
You guys are successful people listening to this podcast. You're ambitious, you're successful. Treat yourself as such. Okay. People want to know. People love information. Private equity people love information. They're trading on information all day. So if you've got an interesting information, you're an interesting company, you're doing something differently, they'll take the call just to learn your data. Okay. So understand your value in the conversation. Joe's laughing right now, but I'm serious. They'll take it because their job is to take the call. Right.
Yeah.
Right. So also consider, doing cold outreach. This is actually an industry in which that's okay. Unlike VCs, where sometimes it's a bit weird. You need the warm intro. You need the, all these kind of disclaimers on how to position yourself with VCs. I find private equity actually not to be that, because they have cold outreach as a part of their process. And I would say, lastly, the book and podcast, if you're an entrepreneur, is the Built to Sell podcast and the book Built to Sell. It's a book that I put on my reading list that you guys can get on morgandebon.com. But it's really helpful for me, even not in the sale process, just understanding the metrics and the structure of how to position your company in a way that could operate without you. Have you read that book, Joe?
No, I haven't. I'm going to go get this book.
It's an easy read. It's a play read. Like it's not hard. It's easy. I mean, you can read hard things, but it's also easy.
Love it. I want easy reads right now. I got 2 kids. I got golf addiction. I got a job. I need easy.
No golf addiction. Anyways, y'all, I hope this episode was helpful for you. If it was helpful, please consider sharing it with another entrepreneur. Consider sharing it with your executive team. Consider sharing it with people in your network, your lawyer, getting their take on things. Part of being open and growing as entrepreneurs in this process is having a shared learning experience, so that when it's time, everybody's at the same baseline as you. That's something else that I highly recommend, because you don't want to be all the way in the moon and people are still on the earth. And you're like, I'm on the moon. Okay. And you're trying to convince people to go to the moon. You don't want to do that. You need everybody to be on the moon.
That's real.
Okay. So share your information, share these episodes, share the book, share the things that you're learning. And I hope that this episode, in a couple of years, when you sell your business, let me borrow $1 and shout out.
Let me hold something. And also, look, I'll also say, look, I'm always available if folks want to reach out Find me on LinkedIn. I'm always happy to have
Careful, Joe.
conversations.
We got a lot of
That's
listeners.
the that's right. None. I'm open. Look, one of the things I mentioned, we talked about this on my journey from law to finance. Like one of the things is, relationships. I maintain a higher order perspective on all this stuff. I'm a man of faith. I feel like I'm put on this earth to help people and to help reciprocate opportunities that have been, bestowed upon me. And so, if I can ever be helpful to people, please do reach out and let me know.
Yeah, and let us know. You guys know I'm super open to feedback as well. When you get this in the email, if you want to respond back to the newsletter, if you have more questions for Joe, we can bring Joe back. We don't have to have a deficit mindset with our
I'm right
finances.
here, 10 toes down. I'm here.
Out. And Joe will also be at Afrotech.
I will be at, yes, I will be at Aquatech. Yes, yes, yes. So I look
I'm
forward to
very
meeting
excited
folks
about that.
in person. Very excited. Very excited. Good stuff.
All right, y'all. Enjoy your day. Thank you for tuning in today, and I'll see you next time on the journey. Thanks for listening to the Journey podcast. If you enjoyed this episode, make sure you leave a review and head to our Instagram and YouTube to leave a comment. I look forward to hearing how this podcast has made an impact on your own journey.